Welcome to Markets Now. I'm Michelle Rook along with Mike Miner with Professional Ag Marketing, and we're seeing a lot of lower prices today with the exception of some of these contracts in soybeans and feeder cattle futures. And Mike, let's talk about, last week was a down week in all the grains. We had funds doing some massive selling pressure. Is some of that carrying over here into this week?
Yeah, you could see a little bit of it. From a fund activity perspective, the thing that really had my attention last week was one, the net change of about 64,000 contracts on corn. The market simultaneously decided to get rid of their longs net position that was still remaining and then start going short the corn market. So now being about 64,000 contract change week over week, and now we're negative or short contracts in corn, following right along where wheat has been. Now, wheat is an interesting one, I think, in my opinion, because the wheat market, they've got a net short position as great as we saw back in that 16, 17 type time frame, which was record at that point. So they're pushing some pretty strong net short positions, and that's putting a little bit of pressure on the corn market to relieve some of those as well. And then the soybeans, even, they got rid of a decent chunk
Yeah.
here, back to more of a mild net long position at this point.
So, Mike, do you think that the funds are going to push a lot longer in the corn and keep pushing this thing? I mean, we took out some pretty major areas of support here recently.
Yeah, from a technical picture, the suggestion is that we're oversold technically in the short term here. RSI, stochastics, short term wise, we are oversold technically. And when we blew through some of those major support levels, that was a really bearish turn in momentum. And when I look forward here at how much more they'll take off, from a seasonal perspective, I'm struggling a little bit because one of the last times we went and took a major net short position ahead of the growing season was in 2019. And that really came to bite them in the butt right after we had a major rally. They were short around 300 and some thousand contracts of corn at that time after the trade war and whatnot. So I feel like that could be a fresh enough reminder to say, hey, let's not get too big of a net short position going into a growing season here on these grains. Let's feel it out, feel some weather out for a little bit. And if we want to do it after some time frame of actually having a decent crop in the ground, then maybe they can get a hold of it again and let the bears really take control. But until that point, I'm just hoping that the funds don't push too far ahead of a growing season here.
Yeah, you bet. We've got a lot of season left. Part of what hurt the market last week and caused some of the fund liquidation has been some of these demand concerns with the China cancellations and whatnot. But, we did get at least some positive news with E15 and the waivers that are going to be granted for this summer, in addition to the fact that export inspections were actually above expectations this morning.
Yeah, cumulative inspections still remain well behind the USDA's
True.
forecasted pace for corn. That's going to be an issue. I think that's something worth looking at going forward, especially since China, like you mentioned, they've canceled over 24 million bushels of corn sales now in the past couple weeks. And, soybean inspections, those are actually well ahead of the forecasted pace that they need. So it'll be interesting to see what the USDA does with exports here in May. This could be a really exciting report for a WASDE coming up on the 12th when we start talking about the demand characteristics of exports here going forward. And when I start to forecast out just export impact on these balance sheets, it could start to look very ugly going into that May report as we start to look at next season with a bigger carry out here of 1.5 plus on corn ending stocks. You get that next year number over 2 billion bushels pretty easily, even with a little bit of a yield demand or a yield decrease there.
Yeah. And as I mentioned, E15 now being granted, I know that should be a little bit positive from the demand perspective.
Yeah, because if we look at it here, it's kind of interesting on the gas stock side. We are actually at the lowest gas stocks in the United States for levels since about April of 14. So we're really low on gas stocks. From a seasonal perspective, everything is kind of happening the way it should. It kind of peaked in February, and now we've had 8 or 9 straight weeks of declines in gas stocks. And looking forward to, Memorial Day weekend coming up here, that's kind of the major kickoff for major gas demand for the summertime. And this is looking at a time frame now where we're worried about inflation still to this day. So the government's going to try to keep that under wrap a little bit. And one of the things they're going to go out and do here is that the EPA granted their summer E15 waiver before Monday's deadline here, and that's only until about May 20. But it sounds like that they're going to push that beyond that from the looks of it. So we'll keep that in mind here. I don't know how big of a balance sheet impact that's going to end up having here,
Right.
especially with the fact that the ethanol numbers maybe not where it needs to be on pace anyways at this point. So maybe that'll help even that out a little bit.
You bet. So we talk about money flow. We do have the Fed meeting this week, and so that's the other thing that the market is really going to be eyeing, isn't it?
Definitely. Dollar was up just a smidge here this morning. Still decently high levels, something to keep in mind. They'll have another rate hike, it looks like, at this point in this report. Then they'll maybe take a break until the end of the year to see what mild recession the Fed has put in their own words is going to look like. So maybe another rate hike here if things kind of keep in control. But if inflation takes off again, I think they'll be pretty proactive and they'll try to contain it pretty fast.
Right. And obviously, the livestock sector will be somewhat in tune with that as well. Let's talk about cattle because we managed to close with higher weekly closes in live cattle futures last week. It looks like a little consolidation here today. But, where do you see that market going right now, especially since, choice cutouts today, maybe just a little bit softer? Have we run the course here on that beef market, do you think?
Not quite yet. The thing I'm
No?
interested in here on the cattle market is, we've had such a premium cash market to where the June futures have been holding, and that keeps June pretty supported well here in the short term.
Sure.
And Southern Cash was down another $2 from the week before. But we've got about an $8 premium to the June futures here from the Southern bid. And if you look at the northern bid, we're probably a good $14 premium there. So that's going to keep things supported for the time being. You saw choice back up to 311 here, which is great compared to where we've been at here. We could still continue to see that run up. But, what's really supporting the cutout on beef here so far has been the fact that we only killed 620 last week. So we had a low kill week. Weights are current. So just basically supply is helping keep those the demand side holding in there for now.
Yeah. And those tight supplies, obviously, we aren't into those tightest numbers even as of yet. As far as the cash rate, and I think that's a really good point that you make. Cash has been leading this, but we pretty much already have this factored in here in terms of where the futures board is, obviously.
Mhm.
Situation is different with the hogs, though. Futures are at a big premium to where the index is, and the market just continues to kind of wait for this cash market and whatnot to catch up and bottom, doesn't it, Mike?
Yeah, last week I can actually say something good about the hog market for the first time in quite a while. We had a good cash market last week that was up, which was nice to see. However, Packers needed few more to finish out the week, pretty much. But at this point, the question is going to be cut out. Cut out. They've saw it run up until this point. We need more. If the cash market's going to continue its run higher, cutout's going to have to step up here this week. Otherwise, this cash rally could be a little bit short.
Yeah. I also have to ask you, I know isowean prices are at pretty low levels. We just heard news about Smithfield maybe closing some of their sow operations in Missouri. Is this kind of some indications of the overall status or health of the industry right now or not?
Yeah, I think we're going to start seeing some of this occur. If we do have a liquidation of around 90,000 sows in northern Missouri, for example, that's not quite 2% of the industry, which we do think we are going to reduce the sow herd going forward at this point a little bit. And others are making that difficult decision as well. And we haven't really seen the sow kill data rise up quite yet. But we think it probably will here soon enough. And that obviously takes some time. It's not an overnight change. So we'll see what kind of impacts that has on the industry from a kill perspective, putting more meat on the market in the short term, but a little bit of help down the road, hopefully, for this hog industry.
Yeah. I know you have told me though that, even though we have pork prices well under where beef prices are right now, that really it's still a very profitable part of the business for the retail side of the pork business, isn't it?
Yeah, on the retail side, I mean, experiencing decent margins here, and we just have to see the retail prices come down a little bit on pork to get more competitive. And at the same time, too, it would be nice to see some better weather going forward for grilling. Break out the smokers and really try to get demand to increase here. But the big thing I see between cattle and hogs here is just supply. The cattle supply is down. That's helped really support their box beef values. And on the hog supply, we've seen that number trend higher year over year than we expected, and that's really led to where we're at today.
Yeah. And obviously those pretty active cattle hog spreads at times. All right. Thanks for joining us so much. Mike Miner with Professional Ag Marketing. That's Markets Now.